Now, what if Facebook was born in Europe instead of Mark Zuckerberg's Harvard dorm room? Would it have become a social networking colossus? Would it be worth $50 billion? Our next guest says not a chance, and he ought to know. HUSSEIN Kanji saw Facebook up close in the early days. He worked with Jim Breyer, the venture capitalist who first bankrolled the company back in 2005, and now he invests in early-stage tech companies here in Europe. HUSSEIN also worked at Microsoft and Sun Microsystems. HUSSEIN, you say no way to a European Facebook. How come?
Well, I'm not saying no way. I just think it's going to take some time to be able to develop this. I mean, in fact, one of the very early companies in this space in social networking was a company called Friends United. Actually started here in the UK a little bit ahead of Facebook.
But it didn't get off the ground.
Well, investors wanted it to become profitable as soon as possible, so they started charging for it. When you start charging for it, you lose users, right?
Okay, so talk to us a bit about those circumstances, that environment. Why is it? Is it because you've got a different kind of investor with a different kind of risk threshold that startups don't seem to have the same kind of track record here in Europe that they do in the U.S., notwithstanding all kinds of good ideas?
Yeah, I mean, there are great ideas here. I think there's just not as many, there's not many of us, first of all, to begin with here in Europe in terms of the venture capital community. And just like the East Coast, I mean, Facebook started out of Harvard, but the very first firm to invest was a West Coast firm, Axel. So that tells you a lot. It's the same kind of culture that's out here.
Okay, so if everybody here is looking for more of a sure thing, a payoff, let's say, in the nearer future as opposed to the distant future, is that why maybe we might see pretty strong demand, say, for that Facebook offering by Goldman Sachs here in Europe?
Yeah, absolutely. I mean, I think when you have a winner, a clear winner, there's a lot of appetite because, you know, when you invest behind a winner and it's kind of in the prime of its market, it usually continues to grow. I mean, just look at what happened to Google back in 2004.
Okay, but tell us this, based on your experience, what you've seen happen to Facebook, your work with Excel, the work that you're doing now, is what Facebook is doing, selling shares in a private offering through Goldman Sachs, the kind of thing the company should be doing right now?
Well, that's a hard question to answer. I think what we're starting to see right now is kind of a private version of a public IPO, right? I mean, what they're effectively doing is selling it to a bunch of high-net individuals who normally would have done this in an IPO issuance, and that's a whole different conversation as to why they're doing that.
Okay, so talk to us a bit about the kinds of companies that you're working with here. Let's say you're a social media startup in Europe. What lessons should you be learning from Facebook? What lessons are you teaching them?
Well, I mean, I think one of the biggest things is that you have to focus on user acquisition and user growth, right? One of the reasons why Facebook turned out to be so popular is because they just got the product right. So more than anything else in the world, you have to get your product nailed. And then the next big thing is how do you scale that product? You hit all kinds of engineering challenges. I mean, Facebook for a long time was really had some significant engineering challenges. I mean, Friendster, which was the early pioneer in this, fell apart because of the engineering challenges. So you have to spend a lot of your time on product.
Okay, so let's say there are good ideas, and there are here in Europe, and they are getting funded the way that the startups get funded, say, in California because of the VC community. That creates opportunities, clearly, for people like you. But maybe is Europe the kind of place that Google should be prospecting in because there are unfunded opportunities here?
Well, I don't know about Google, but I think the rest of the venture capital community ought to be clued into actually what's going on in Europe. In fact, some of the best and the brightest here in Europe are actually packing their bags and going to the West Coast. They're getting turned down by the venture community out here, and they're getting money from Benchmark, Sequoia, all the leading firms out on the West Coast. But they're forcing them to relocate.
That's got to have serious implications for, you know, the prospects of the European economy over time.
Yeah, you know, if I was a European policymaker, I would be worried. I mean, the U.S. spends about 0.2% of its GDP on venture capital. Europe lags by about 1/4 of that. So there's a significant gap between the U.S. and Europe.
And is there a sense that somebody here is getting the message that there is a need to encourage innovation with early stage financing, the kind that you do?
And it's not just the innovation. I think it's more around this financing. You need very patient investors who want to build a large, scalable business, and that's hard to do. It's an educated class of people. It's a specialist class of people. There are not that many venture capitalists in the world. I think the UK is paying close attention to us with their East London City. I know there have been a bunch of government policy meetings, some of which have been pulled in. But, you know, this is an ongoing process, and it might even come up at Davos this coming week.
Well, I'll be asking questions about it. Sounds like an ongoing process and possibly an ongoing problem. HUSSEIN, thanks for being here.
You're welcome.
HUSSEIN Kanji, he used to work with Jim Breyer over at Excel Ventures, saw Facebook up close.